Good evening, everybody. I'm going to do a quick sound check just to make sure this microphone is working. Can everybody hear me all right? All right, good. All right. Okay, we're going to kind of do a quick review of why the individual signals is important for evaluating what an overall market trend is doing. Um, For example, today did a doji. Not a bad day for the Dow, held up. However, look where the doji is occurring, right here uh, on the T line. The great benefit of seeing a doji on the T line gives us a very good aspect as to what the trend will do tomorrow because of the doji rule. If they open lower, pretty good assumption that they failed at the T line, we're still heading down. Now, what can be added to that analysis is look what's happened over here on the NASDAQ. Look where the selling is having, or the indecisive trading is having trouble, right here at the recent high. And if you take that out even to the S&P 500, get kind of the same scenario right here at the right here at this level. We're starting to see some hesitation. So this makes it very simple. If the pre-market futures open lower tomorrow, or show that the market's going to open lower, you probably want to be moving a little bit quicker on maybe taking some profits, because pretty much the probabilities are telling us that the current uptrend in the market might be consolidating, not necessarily reversing, because we won't know that until if it comes back to the T line, what it does at that level. Okay, so what I want to take a look at, first of all, we'll take a look at why we recommended some of the positions we did today. For example, look what was happening in Hawaiian Air. Make this bigger. Look at all the dojis and then the bullish confirmation. Looks a little bit doubtful now, but what is our underlying analysis of this chart? We're in the oversold area. We had a bunch of dojis and then bullish confirmation. Still want to give this the benefit of the doubt, especially if they open this higher tomorrow and start trading higher. Hold on, I need to get a sip here. Yeah, here's the 200-day moving average up here. Here's the 50-day moving average. Simple moving averages, not so that we're using them as indicators. We're using them to see what everybody else is making their decisions at that level, because we can see what type of signals or patterns are forming, seeing immediately what everybody else's investor sentiment is. The gray line right here is the 34 EMA, works relatively effectively. Then the most important one is this black line. This is the T line. Very simple. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line, with the caveat that the further you move away from the T line, the higher the probabilities it's going to come back and test it. So that makes witnessing a candlestick sell signal way above the T line in the overbought condition that much more likely that there's going to be some profit taking. You get ready to close out the position. We are also going to recommend DNG I'm sorry, DFFN. Now, this is why your entry strategy is very, I want to say, very important. This looked like it had consolidated after a kind of a fry pan bottom breakout, a pullback, and then it looked like the pullback was over. So what did we want to see today to be buying? We wanted to see it open positive. The bulls are still there. The fact that it opened here told us that let's not jump in just yet unless they start bringing it up. But in this case, they never did, which kept us out of what would have been considered a bad trade. So not only is the analysis of each chart telling you when it's time to buy, but the signals are also telling you very simple entry strategies. What do you want to see after a candlestick buy signal? You want to see if the bulls are still there. Same scenario on the sell side. If you see a candlestick sell signal, what do you want to see to confirm that it's time to go short or definitely close out that position? You want to see see if they open it lower. Are you looking at the wick or the body to buy? The body. Remember, the most important element of candlestick analysis is where do they open it and where do they close it? Where do they open it and where do they close it? The shadows are just the range that traded. The important factor is where did they close? What was the final decision in that trading? So this is why we kind of expect setups. We can see right here on this one, the doji after a nice Morningstar signal off the 50 told us either they were, after they filled this gap, either they were breaking out or they were pulling back. This is why the doji rule is one of your most simple trading strategies, that if it opened lower today, what did it tell us about them breaking out above the filling the gap? They didn't. Now, did this tell us there's been a true reversal? No, because we're still trading up above the T line. So if you were long, you stayed long, or you could have closed out the position and waited to see what the next buy signal is. Now, if this opens positive tomorrow and starts trading positive, what do you got set up here? This is what we call the double doji. Can you call ALG? Not necessarily. Remember where an evening star signal is likely to occur when your stochastics are up here. Right now, this is more of a just your normal consolidation. And why do I say consolidation? Because you had an indecisive day, you've had another indecisive day, you've had a strong buy signal, you're still above the T line. The probabilities are still that you're going to be in an upward direction. This will work on Forex. This is candlestick analysis is not for any specific trading entity. Candlestick analysis is the graphic depiction of human nature when it comes to their investment decisions. Doesn't matter what you're trading. Stocks, bonds, currencies, tulip bulbs, anything that has fear and greed in it. Let's see, what am I doing here? All right. So what we want to recognize based upon human nature is the patterns. This is your classic fry pan bottom, strong price move. Pullback. There's your doji. Look how far away you are from the T line. Where do you think it was going to go back to? Back to test the T line. Yes. Raymond. Rick, could you type in to help Raymond? he has to hit some button. But this is our classic. We know what happens when you break out of a fry pan bottom. You get a strong price move. We know what a J-hook pattern is, where it consolidates. Notice how it did a Morningstar signal right here at the T-line, starting the next wave up. Why do we call this the classic? Because you're coming out of a fry pan bottom, strong price move. The prerequisite for a J-hook pattern is a strong price move with consolidation ready to go into the next wave. Can you please tell first wave start from where I am? Brand you, thanks. Brand you. It's just a visual measurement. This is approximately wave 1, whatever you want to call it, from 23 to say 35, 12 points. Now you look at this for approximately a 12-point move. I say approximate. Robert, we don't know that. We don't make those assumptions. And we don't really care. The market is going to do what it's going to do based upon what everybody is doing, is making their decisions. Everybody knows that tomorrow is a quadruple witching, so it's not like it's any surprise. So you see what the actual charts are telling you as far as their decision making. So staying above the T line, look at our little kicker signal on LXRX. Notice where it pulled back to, right smack dab to the T line. Now, sold off today, but look at the nature of the sell-off. Very indecisive. Yes, we're not trying to we've got some predictive capabilities based upon what the results are of a price pattern. And then there's also in times where, like we saw in the S&P and the NASDAQ, that we now can kind of make a calculation based upon what usually happens after a doji type day. If they trade positive, we know they're breaking out. If they trade lower, we know they're resisting here at this level. Oops, LXRX. Because of the kicker, because of the J-hook pattern, I don't know what this is. But as you can see, the uptrend's in progress, and we did a doji, which usually indicates consolidation, which also means if it opens positive, you can be buying immediately, because that's going to give us kind of a double doji setup, meaning they consolidated, and then after the consolidation, they continue the uptrend. That's right. RM, that's a definition of like God created economists so they could make weathermen look good. So here's that belt hold type signal in GDS. Look at the kind of the bobble breakout. And what's one element of looking at this chart, even though they opened it much lower today? They still haven't been able to close this below the T line. The fact that they opened here and closed up here, what'd that tell you about the buyers and sellers? It looks like the buyers soaked up a lot of the sellers, so there's less sellers in the way. No, just because you wouldn't be maybe buying, oops, LXRX. You're buying the pattern. As long as you're above the T line, it doesn't matter where your stochastics are. Remember, the stochastics only give you an indication of where you are in the trend. The signal and the pattern are still your number one criteria. If you looked at, no, I still wouldn't have probably closed it today unless they sold it off hard back down below the T line. The fact that they opened it lower and kind of waffled in here still told us that our J-hook pattern was still in progress. J-hook pattern is letter J. You mean, yes, there's what we call the J-hook right there. And it's usually preempted by a strong price move. So the reason I'm showing different trading strategies is because there's a lot of them. Meaning there's a lot of things you could look at. But if you're trying to jump from one to the other, you may not really narrow in on which ones work the best. So you can pick out specific patterns. Like when you can see that there is a trend, then we can see what type of signals are occurring right here. There's your left-right combo, gap up, bullish confirmation. What did it tell us about our resistance level? It wasn't there. What can we assume about this wave? That we're in wave one, wave two, going into wave three that could have the same magnitude move as this one right here. Which also makes things like Kala, where if you're trading that type of trading strategy or that type of pattern, you keep an eye on this one. Now notice what this one did today. This is why you want to be able to recognize what each signal and pattern represent. If this is my potential breakout, which we obviously can see, what tells us that we've got a good prospect at doing that? Well, look what the signal was today. Opened here, closed here. Today they gapped it up above the previous day's open and did a doji type day. If it opens positive, what do we got going? We've got a bullish flutter kicker. If it opens positive, our doji rule says there's a good probability it's going to trade positive. And if it trades positive and creates a green candle, we've got a bullish flutter kicker signal, which obviously is one of our strongest reversal signals. And if we have a bullish flutter kicker signal breaking out through this level, what's that tell us about our next wave? That we're probably starting the next wave with a very strong signal breaking out through the resistance level. Probabilities say we're heading higher. So just recognizing that setup, and here it is even more pronounced. You can see the obvious downtrend. Then this is where we use what I call the 2+2, a bullish engulfing signal in the oversold area. And where did it occur? Right smack dab off the 50. So we got a bullish engulfing with a booster, right smack dab off the 50, closes at the T line. What do we need the next day to confirm? Well, if it opens positive, what's it confirming? First of all, it's confirming our bullish engulfing coming out of the oversold area. Second, it's telling us the T-line's probably not acting as resistance. Third, telling us we're breaking this level right here, which means we got a high probability of another wave to the upside. Just adding everything we know is likely to occur just puts you in situations where not only are you going to be in the right direction, but in the right direction with the calculation of how big your next move might be. And this is all based upon one simple premise, that human nature works the same way time after time. So the bobble breakout on pod, and then the J-hook pattern on pod tells us our uptrend remains in progress. You just stay long on this one. AKAM. I got to go back a little bit and see if this is a, no, it's just a bobble breakout. So even though we're up here in our overbought area, when it came back up through this level, we could see obviously the 200 was acting as resistance. We could also see that the T-line was acting as support. So what do we got going on over here? Basically the T-line crunch or pushing up through that resistance level. And once it goes through, we can be buying right here. Now remember, we're always advocating that you want to buy candlestick buy signals when your stochastics are down here in the oversold area. But more than likely on a pattern breakout, like a bobble breakout, which is merely a J-hook pattern with an obvious resistance level, you're probably already going to be up here in the overbought condition. So remember, the stochastics just tell you where the signal is occurring, hopefully in the oversold area. A pattern is usually going to break out when it's in the overbought area. So I'm just going through some of the ones that we're in right now. Observe the obvious. Fry pan bottom, big left bow. We're still in an uptrend. There's another. Notice the pullback right here. Decisive? Nah. Doji, little hammer, hammer, doji, and then a left-right combo. What's that tell us about our uptrend? We're still heading up. Now, big is another pattern. Oops. That's the project that we're working on right now is these type of situations. There's your best friend, doji gap up. Where did it gap up? Through this resistance level. What's this tell us about this move? We should be in a 45 degree. It's pulled back. Notice where it's pulled back to, the 3T line. If this starts curling back up, what's that tell us about our consolidation up here? It's over, and now the strength of that best friend signal tells us we should be heading higher. So we were buying on this day, and then it kind of consolidated. That doesn't keep us from buying again. We were buying some of the calls, and I think it was a call spread. Might be buying some calls again if it starts curling back up, just because we can recognize what type of pattern setup we've got. And things that look good at one time, this is why candlestick analysis has both the prospects of seeing when a bullish pattern is starting or that it's not starting, when you want to close it right back out because it's not working, which is evident here in Crone where they might have broken out through this wedge. That was the prospect of this move, but the fact that they closed it back below the T-line and the halfway point of the candle that told us the bulls were in control was clear evidence that the bulls weren't there. You close out the trade and move on to something else. CBay was that in that same category. Excuse me, category. Nice pattern, nice fry pan bottom breakout, nice pullback, and we were ready to buy this on positive trading yesterday, except it didn't trade positive. Right now, we're staying out of this trade because it's not setting up yet or not confirming a J-hook pattern. I would rather pay for it here, knowing that this pattern is setting up, than try to buy it down here, not knowing whether we're going to drift like this. I'd rather buy the pattern as it's confirming or after it's confirmed. So WPM, which is another one that you had to be a little bit skeptical, doubtful, when it hit that level and did kind of a shooting star. Now it traded lower. The only way to stay in this one right now is it has to open positive and trade positive tomorrow. Otherwise, it's not a good chart anymore. Take that money and go on to something else. And when I say that, it's based upon that if you're buying something based upon a human nature reaction of what should be occurring, There you go. Big breakout kicker signal. Looks like it might have just consolidated. This is ARQL. If you see that the selling has stopped, this has the prospect, again, that kicker signal, creating a good, strong price move. So one of the aspects of identifying a strong signal, like a kicker signal, is what is a good entry? Well, no good entry. Not yet, not yet, not yet. But on the next buy signal, which tells us this profit taking is over, that's when you can get in. And why would you be alerted to that next buy signal? Because you saw that there was a big change of investor sentiment based upon that kicker signal. Oh, I'm sorry. I thought everybody was not asking questions. The T line, I didn't scroll down enough. Oops, okay, let's see. That means what happens on Friday during double witching? Not a whole lot anymore. Years ago, when the options market was a lot smaller, a lot more thinly traded, the witching days were more relevant because the prices of a stock could be moved around to make the options, underlying options, either worthless or worth something. And it was pretty, now this was back in the 80s when option trading first came around. Whoops, hold on. Oh, sorry about that. I forgot what I was saying. Oh, I was reading this. Yeah, you could call it a fish hook. The T line is the 8 exponential moving average. A chicken hawk, yes, that's why you should pick out a strategy that you can be well versed to and then understand it completely. That's why you don't need to necessarily know all 18 or 20 different high profit trading patterns. Uh, Stochastics of 1233. Yep. You mean if the trend line is reversal thing? Well, what you're looking for is a change of investor sentiment. If you can see that there's a change or a breakout of a trading range, yes, that means there's a new dynamic. GL, my trading universe are stocks greater than 5, mainly because most brokerage firms do not margin stocks less than 5. And I know every time I put on a trade, the probabilities are in my favor that I'm moving in the right direction or have a good trade. So I want to get leverage, meaning I want to be able to margin. And I usually make my minimum trading volume 200,000 shares a day on average so that I can get in and out of the trade fairly easily. So that takes the whole trading universe from 10,000 down to about 2,700. Here's one that's trying to set up that if it can break this wedge formation, J hook, yes, on Kendai. Does overall market sentiment overshadow signal and patterns? No, not necessarily, and I'll get to that here in a little bit. Okay, do we have sound? Fibonacci retracements, yes. Not necessarily that they work, that you could put the Fibonacci retracement on your chart to see if that's where you're getting a reversal signal. So you're not using them to look for a reversal signal. You're using them to confirm that if there is a candlestick reversal signal at a retracement level, that's probably where they're retracing. Well, I've always had the 3T line on here, which, again, the 3T line works more effectively. The further away you move from the T line, the higher the probability it starts working more effectively. So up here in the overbought area, you look how far away you are from the T line. These sell signals become more relevant. So what's our rule of the doji? If you're up here that far away from the T line in the overbought area and it opens lower the next day, close out the position immediately. Oh boy, how to use the Fibonacci. The 3T line is the 3 exponential moving average. Very simple. If you're using the Fibonacci numbers, find where the bottom of the trend is, find where the top of the trend is, and there's your 38%, there's your 50%, there's your 62%. It looks like right on the 50% retracement, you have kind of a left-right combo. That's where the buying started. Okay, some of the biggies. Let's go through them real quick. Apple. Notice the scoop type pattern and notice where it bounced right off the 34, then gapped up through. You got kind of a scoop pattern. Roku had been acting well ever since the kicker signal until they gapped it down. That would have told you you had your stop below the T line. That's where you should have closed out. Now you've got the potential of it going further. Remember, it's going to move in the direction how they open it after a doji. So if they open this lower tomorrow, look for more downside, possibly a doji sandwich. Do you use crossing moving averages? No. We're not trading the moving averages. The number one criteria is the signal. Then everything else becomes a confirming indicator. We're not using indicators and then seeing what the stock price should be doing. This is Amazon. Morningstar type signal, kind of right here at the support level. Backed off a little bit today. So got to see whether they can get it up to the 200-day moving average, which would be the first target. Right now, I wouldn't be necessarily buying Apple up here. This was the buy area right down in here after the confirmed. So when you see it heading up, doesn't necessarily mean you have to chase after it. A scoop has a flat handle, yes. Hold on, I'll get there as soon as we get through the biggies. Tesla, nothing of any great magnitude on this one. So if you can look at a chart, Netflix, not really telling you a whole heck of a lot at this point. Oh, come on. Just not a real dynamic chart until you see something stronger. I can throw Boeing up. Boeing, not necessarily. Look what's happening after you had buying, then you had selling. Then notice what the nature of the trading is over here. Indecisive. What was the nature of the selling over here? Indecisive. Where are your stochastics? Getting toward the oversold area. So if you're shorting and they open this lower tomorrow, you kind of expect they could bring you down here. But notice what they did on this trading right here. They filled this gap over here. How to trade a sideways market? I can easily scan on any given night longs and the best shorts. So if I'm in a sideways market and I'm not getting any pressure one way or the other, I'm pretty easily able to find 5 good short positions and 5 good long positions, and they will trade on their own merits versus having the market that may not be moving in any direction helping one way or the other. This is NVIDIA. Piercing signal right off the 50. A doji sandwich right here at the breakout level. I'd stay long on this one. With the prospect, if I can make this small enough, but now they've broken out through here, you could start moving up toward the 200-day moving average. And Facebook had a nice fry pan bottom setting up, but notice how it failed up here. Couldn't break through. Today they gapped it down. And after hours, it looks like they're trading down here. So it's probably something you don't really want to short, but if it opens down here and doesn't immediately start trading positive, you probably want to come out of it. Oh, JH, that's something you want to learn. Remember, we've already narrowed down the 50 or 60 signals down to the 12 major signals. And the reason we've narrowed them down is because the 12 major signals, with the piercing signal being one of them, those are the ones that occur 99.9% of the time. And once you see them, they're the ones that have a relevant result that's going to occur. So the first thing you want to be doing to understand candlestick analysis is just merely learn the 12 major signals, six longs and 6 shorts. Then you want to learn visually the probably the 6 or 8 different candlestick patterns. The fry pan bottom being one of them, and knowing what to expect coming out the other side. So which one were we looking at? NVIDIA. A piercing signal is one of the 12 major signals, and it's where it opens below any of the previous day's trading, not just the body, just the previous day's trading, and then it closes more than one halfway up this candle. And that's very important in Japanese price trading analysis, because the Japanese use very simple logic. If they could close up more on a piercing signal more than halfway up the previous bearish candle, that means the bulls are starting to take control. Hold on to your individual stock requests until I tell Jim to do, or Rick to do, a double line. It could be considered a belt hold, yes. It's a piercing signal. You can also call it a belt hold. Now, a belt hold obviously becomes more relevant the deeper they open it and bring it back up. But a belt hold doesn't necessarily have to create a signal. In this case, you could call this a belt hold piercing signal. If it closed above the open of that day, it would have been a belt hold bullish engulfing signal. Michael, I'd be interested to see which ones have higher frequency and profit potential, if you see any of them. And the reason right now, no. What's the definition of a dark cloud, CB? Where does a dark cloud have to open? I came across the 12 major signals by a very simple study. I spent hours saying, all right, if this is a top, was there a signal here? Let me find a better chart. If this was a bottom, was there a signal here? Yes, a dark cloud has to open above any of the previous day's trading. So let's see, I forgot what I was answering here. Labu, look at the left-right combo right here on the 34. Maybe bearish Harami, so it wants to see if it came back to the uh, T-line. All right, so the way I've came across the 12 major signals is, again, out of the 50 or 60 signals, I would go back through charts and say, all right, here's a peak. What is that a signal? Well, I'd go back to my, at that time, a very antiquated description of the signals. Say, yeah, that's a dark cloud. Or just a signal in the oversold area. Yeah, that's a morning star signal. Well, after doing that for hours and hours and days, because being a greedy little son of a gun, I wanted to find out exactly what signals worked where. And as I went through, I kept coming across the signals over and over that are now the 12 major signals. So I see, all right, there's dojis in the oversold area. There's your bearish Harami hanging man. There's your shooting star dojis. Well, as I kept doing all this, there's your bullish Harami. I kept finding the ones that after a while, yep, I recognize that. But the other 50 or 60 signals didn't show up very often. Some of them, I had even a hard time finding those signals to be examples in the first book that I wrote. So what I finally determined was you could spend hours and hours trying to remember all 50 or 60 signals, but you should spend your mental time and energy just learning the 12 major signals because they're the ones that are going to occur 99% of the time. And if you see one of the major signals and you see one of the other signals, it's more than likely you still want to go with the major signal on that day. Okay. Do you trade only daily yourself? No, I trade intraday. I may trade the 10-minute chart off the crude oil or feeder cattle or soybeans, things like that. Okay, I'm going slowly here. Nugget. As you can see, when you had a doji gap down, that's a good indication that the bears have taken control, that if you were long, you definitely wanted to close out your long position. That didn't work out. I don't trade Forex. Now, I do trade specific signals or currencies. I might trade the dollar if I see it's moving, but I don't trade anything against it. I just trade the dollar itself. The British pound. So if I see a strong signal, I'll just trade in one direction. Where do you find flashcards? JP, go to our website at candlestickforum.com and go to products and services. Okay. Some of these charts, this is why you want to learn what this means down here. Dojis in the oversold area starting to confirm. Now, when you see something like that, I'll skip down. If we had recommended going short on Domo because of the doji gap down, But notice what was happening down here. We were getting to the oversold area. We were having a doji, spinning top, and then trading positive. What was that telling us about our probabilities? Probabilities are the sellers weren't there anymore, close out the position. So why do you want to close out a position here? Because you started seeing things that were telling you, oh, there's indecision in the oversold area. This does not become or remain a good prospect for being a short position. So you close it out so that you don't get hit with something like that. Jumped around too much. Let's see. We recommended TLRA the other day. Had it opened positive, because notice what it would have done. It would have created that J-hook pattern. Except with it opening down here, what did that tell us about the strength of the bulls? They weren't there. This one wasn't a transaction. Now, if you're watching this, what is the one aspect of this chart that tells you you still want to keep watching it? They haven't been able to close it back below the T line. So what do we want to see from here? I'd like to see it get back up above this level, telling me I might have another wave. But right now I don't have to do anything because there's nothing there telling me whether the bulls or the bears are in control. I'm looking for the J-hook pattern breakout. Like right there. This is why we recommended this. If it opened above this level 2 days ago, you start buying. Now, we always get the rhetorical question, or can you always expect a big move like this? No, all we're doing is trying to find the high probability trade setup that tells us that we've got a J-hook pattern in progress. Do you always get in a big, strong move like this? Definitely not. But knowing what the patterns are telling you based upon human nature, if you're buying here, you've got a much better probability that you are going to participate in a big price move. What options would you use for GH? Well, right now, I probably wouldn't. But right here, I may have bought the 80s or even the 80, probably the 80s. I wouldn't be buying it now because what's the magnitude of this move? Here's wave one. Here's wave three. Almost the same. I'm now starting to look for profit taking at this level. Did the 15-200 SMA averages same thick line? Yes. On all these charts, whether you're looking at the daily chart or the 10-minute chart, you have the same criteria. There's your 200, there's your 50. That's because that's what everybody uses, whether they're trading off a 10-minute chart or a daily chart. Rigid member, that is why you want to recognize what the pattern is telling us. There's so many times people say, oh, I don't want to chase after this because it's already moved too much. If it moved up here, up whatever it was, 2%, gap up, you watch to see what the 10-minute chart was telling you. Let me see if I can get back that far. What was the 10-minute chart telling me? Oh, they were still buying. They weren't selling. They weren't selling. They were still buying, still buying, still buying. So if I'm looking to say, oh, I don't know whether I want to buy here, but I see it moving up, I know that I've got this type of pattern. That's why we want to recognize what the patterns represent or what type of trade setup they illustrate. So here is THC, doji, gap up. We're right here at a breakout level. If this opens positive tomorrow, what type of pattern do you have? Wave one, wave two, going into wave three. Yes, the gray line is the 34 EMA. Now, some people say, well, why do you use the 34 EMA versus the 20? The nice thing about candlestick analysis is the number one criteria is the signals themselves. Then if somebody says, oh, put the XYZ indicator on, it seems to work well. If you put it on and it doesn't enhance the probabilities of being in the right trade at the right time, take it back off. That's why you can see these charts aren't very cluttered. Just very few moving averages. I could actually probably take the 34 off and not really miss anything. But the two major ones, the 50 and the 200, is what everybody uses. Now, if somebody says, well, the 20 seems to work also, well, throw the 20 on there. If it doesn't add anything after a while, yeah, take it back off. Do you draw support resistance? Yes. If I can see this is my potential resistance, I can draw a line through there. If I can see this is the trend trajectory, yes, I can draw a line through there. Now, the reason you can do that is basically you're looking at everything else, or looking at everything that everybody else is looking at, which is a downtrend that had a kicker signal like an XPO. Remember what our strongest reversal signal is. Kicker signal opens here, closes here, gaps up, and goes the opposite direction. Is it 1 plus 1? Is what 1 plus 1? Do you trade less activity on Friday? Not necessarily. Remember, even in my trading universe, there's 2,700 charts out there. And we've got the benefit of approximately 160 people in the chat room every day, plus another 20 over in the options room. That's a number of eyes that are all kind of scanning or looking for the same type of things. There's always going to be a trade, whether it's long or short. So that's the one major benefit we have with the simple scanning techniques, is we're always going to have, even on a worse, lethargic, boring day, there's still going to be 4 or 5 that you can scan and find are moving fairly well. So here's a kicker signal after a Morningstar signal on XONE. What can I assume from this? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. And why is this a good looking chart? Well, you've got a kicker signal, which usually means there's been a dramatic change of investor sentiment. So if you become adept at different types of signals, now this one looked more like a Morningstar signal on the other charts, but notice where CRM, Salesforce, opened right here in the 200, did kind of a belt hold signal, and then did a doji sandwich through the T-line. What's our simple assessment here? This was the trend. This was the pullback right to the 50. More than likely, it's going to come right back up into that trend channel. Oh, that's 2 plus 2, MO. That's what I call 2 plus 2, which gives you a strong. So here's Humana. There's our Morningstar signal. There's our doji sandwich. We call that our morning sandwich or our McMuffin. So what's the assumption on a Morningstar signal? That's one of your 12 major signal reversals. What's our assumption on a doji sandwich? There's going to be more upside. So you got a reversal signal, doji sandwich, both indicating upside. Even though this pulled back today, I would think the probabilities right now, because of this McMuffin, is that we're heading at least to the uh, up to the 50, excuse me, the 50-day moving average. When we did our top-ranked signals and pattern training, was it 2 weekends ago? The suggestion was don't try to learn all the signals or patterns. Recognize a few. Notice the scoop pattern. The scoop pattern had a reversal signal, and you can see the flat handle, and then the scoop slingshot effect. So I recommend to everybody, pick out 4 different patterns that you can learn very well. Zen, pulled back, left-right combo, handle, scoop pattern, slingshot effect. Yes, that's another thing you can do. On a lot of services, if something's moving big, you can also see over in the corner in Think or Swim. Down here in this corner would be news of why it was moving. Michael, that's what I recommend, because for years, I would look at charts and say, all right, which ones are the best ones for today? Well, when it started, I didn't have a complete 100% analysis of what was going on. Notice this kind of scoop pattern with a morning star signal smack dab off the 50. Big price move. This puts you in situations where the probabilities are much better. You're going to not only be making money, but good money. So if you can keep moving your trades to where they're constantly in situations where the probabilities are greatly in your favor, and not even greatly in your favor, you got the additional probability that the price move will be fairly substantial. You're going to start moving from being a trader that you're now not trading based upon your not you got your emotions out of your trade. You're now trading based upon what you recognize will be a common human nature trade setup. KN, like the little scoop pattern. Or manpower. Kind of a scoop pattern. Now, what do you do on this one? You see you've already had a doji sandwich and you got a doji today. If this opens positive tomorrow, you got another doji sandwich, kind of breaking this level, giving you that much better probabilities that slingshot effect coming out of the scoop pattern is in effect. Does what was it? Trade? I know it's in Think or Swim. Our scans are pretty much everywhere now. They're in Ninja Trader. The formulas are over in Warden Brothers, Metastock. I'm not sure whether E-Trade got them set up. But again, the formulas are fairly simple. All you have to do is go to our website and copy and paste them. Do your scans work on FinViz? I don't know what FinViz is. All right. Where am I? The fry pan bottom. You can see the fry pan bottom on JNCE. What do we expect coming out of a fry pan bottom? A big breakout. We saw that in Vera Bradley, fry pan bottom. And notice what the breakout was, a J-hook pattern. Again, a fry pan bottom is pretty much the accumulation of investor sentiment building up until they break it out to the upside, and it usually creates a very strong move to the upside. Okay, and MYOK. We recommended this one because look what was happening right here. We had a kind of a bobble breakout, and where was it coming from? There's your fry pan bottom. Get ready for a breakout to the upside. And I don't know whose handwriting this is. There's another one. Fry pan bottom, bobble breakout, or upside. So when you can recognize these patterns, it just allows you to get much more better probabilities that you're going to be in the right place at the right time. Oh, Best Buy, looking for a bobble breakout, but that's not what I was looking for. I was looking for Bed Bath & Beyond. Looks like a bearish J-hook pattern. So when you can see that the selling is starting, if this is wave 1, wave 2, look for wave 3, and where's a likely target? Looks like there's a gap down here. And right there would be approximately the same as wave 1, wave 3. And we were kind of demonstrating that being the opposite of Domo, that when you get into a situation where you start seeing things curling back up, if you're short, you want to close out that position. And we're seeing that right now in something like MLNT. Look at all the dojis down here, then a gap up. So what becomes a very easy entry? The doji rule. If this opens positive tomorrow, you can be buying immediately because you've got doji, 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 doji. Lots of indecision down here, right about the same area that it bottomed out before. Now where's your next likely target? Well, they could bring it back up into this area. Is that worthwhile? Yeah, that's pretty close to a 90% upside potential. Oh, we did Amazon. Phil, way early. I'll just save it until I tell Rick to do the double line. And Fate, another big fry pan bottom. And where is it right now? Just broke out. You can still be buying this one on the prospect that this is a fry pan bottom breakout setup. Oh, and EVRI. This would look more like a fry pan bottom, slow curve. But again, look at the slow curve, gap up. Crude oil, you can see crude oil is in this slow, steady uptrend. Right now at 58.60. You can see the direction. Just a steady uptrend right now, which makes some of the oil stocks worthwhile to look at, such as Whiting, Bass might be doing a little bit of a scoop pattern. So that's the advantage of being able to analyze the underlying commodities, that if gold stocks or if gold is, in this case, not moving well, but if gold was moving like this, that meant the gold stocks were probably moving well. All right, let's go through a few more that look good. RDNT, there's your slow curve breakout. And is it a worthwhile breakout? Actually gapped up above this level. On your best friend, I would just suspect more of a wave like this right now. So this allows investors to, or people to be less afraid of a gap up and a big price move. If you can analyze what the pattern was, that's going to be much more relevant than just a stock that's popped up for some reason. Snap, another one that's broken out to the upside. Look for a 45-degree. Slow curve on FPI. First likely target, the 200-day moving average. Glue, another scoop type fry pan bottom, double bottom, also broken out through the resistance level. Yeti, J-hook pattern, doji sandwich, breakout, wave 1, wave 3 in progress. So when we see the different setups, over here we saw doji, 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 just a flat trading and then a left-right combo on EXPI. Told us we should stay long until we see a sell signal. When we saw the sell signal, where do you think it was coming back to? The T-line / 50-day moving average. So when you see a setup like that, look at ALTM. Doji, 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 long-legged doji, inverted hammer. You can be buying this one. Where's our likely target? Probably back up here, filling this gap, hitting the 50-day moving average. Because of recognizing that if one doji means indecision, a series of dojis means greater indecision. UVE. Nothing here yet, but observe the obvious. Lots of indecisive trading. Where would I be looking to buy? First time it closes up above the T-line. So if we know what the signals are telling us, we can see how we had some buy signals right here. What type of pattern can we see setting up on this one? There's pretty much our wedge formation. So if we've got a wedge formation, if they break out, what's that telling us? Got a high probability there's going to be a lot more upside. And PDCE, little reversal, doji sandwich that broke out through this level. If this opens positive tomorrow, not another doji sandwich, what do we can assume at this point? Wave 1, wave 3 likely going to take you up to the 200-day moving average. Now, why do we say it's likely going to take you to the 200-day moving average? Because everybody that's buying here is thinking, all right, there's my next target. So there's not going to be a lot of selling pressure until they get to that next target. And if you're going short, there's your doji gap down. Now a doji, if this opens lower tomorrow, got a bearish doji sandwich, somewhat along the same lines as if Roku opens lower tomorrow, you got a bearish doji sandwich. Often separate candles can be combined to form a signal. Have you done a course on combining candles? Michael, we call it top rank signals and patterns, where, I forget which ones they were. Trying to, oh, cat, no cat, come on. I'm trying to think of which ones. Maybe Ba. Ba. That has a left-right combo. That's a doji followed by a bullish engulfing signal. Now, if you're talking about taking 2 days and creating a signal from them, no, I don't do that. That's just kind of, that's just trying to make a signal. This left-right combo right here tells me if it opens positive, that's a 2-day signal. Another signal might be your best friend, doji gap up. Okay, so now this is a one that becomes a very viable trade if you watch for that type of breakout situation. Good prospect, wave 1, wave 3 will be the same. I say good prospect because this resistance level, once broken, tells you there's new strength, which usually creates another good, strong move to the upside. On this one, JH, you could call it a morning star. I mean, it's got the elements of a morning star, but the fact that you've got a left-right combo is more relevant. Okay. Are there any general questions on candlesticks? If not, Jim, go ahead, or Rick, go ahead and do the double line. And in 3.8 seconds, do the next double line. Deck, nothing. If you're short, I'd cover the short because you're in the oversold area and you're seeing some buying. Wouldn't go long though until you see a buy signal and a close above the T line. Well. Still in United Rental, you get ready to go short on this one. Your bearish J-hook pattern. FET, good scoop type pattern, shooting star type signal today. If it opens positive, you can be buying immediately. That tells you the profit taking of today is over. OCX, nothing yet. It needed to confirm. If I was going to be buying this one, I'd wait for it to come back up through today's open. Telling you the T line is held. And ATOS, these are the type where once you see a gap up, go to your 10-minute chart. Now, on a big move like this, statistically, if this opens lower tomorrow and starts trading down, close it out. Then you can always buy it back when it comes back up through today's open or today's close. That tells you the profit taking's over. Johnson & Johnson, I guess, got sued because their baby powder caused cancer to somebody. So you should have been out of this one today. You might go short if it starts trading weaker tomorrow. The Russell needs to open positive and trade positive. If it opens lower, it's coming back down, telling you your downward trend is still in progress or in progress. Citigroup needs to stay above the T line. ACB is one of the fry pan bottom breakouts. It needs to trade higher. You can be a buyer of this one if it comes back up through today's open. The SPY needs to get up through this resistance level. If it opens lower, there's going to be a day or two of profit taking back to the T line. The 20-year note traded lower. This one you go short if it opens lower tomorrow. Kind of your Harami and then bearish confirmation. GALT, nothing yet. You've got a left-right combo after a hammer signal that formed right at this level. You can buy if it starts coming up through the T-line. Kind of your McMuffin, Morningstar type signal. There's your bullish Harami. There's kind of your doji sandwich. You can buy this one on positive trading. Just make sure these price stocks are trading close to 1 million shares so you can get in and out fairly easily. American Express, just stay long. Kind of your little belt hold, gap up. You're up above this breakout level. Stay long. At this point, I would you stay long, just use the T-line as your stop. Wayfair, get ready to close this out if it opens lower. Look at your little left-right combo right up here at the top. Anytime you see a left-right combo, pay a little bit more attention. That's a strong reversal. MPW, nothing wildly exciting here. But if it does break through this level, you can be buying based upon the breakout. CRZO, if you're long, stay long. Obviously, you got to get through the 50. It wouldn't be one of my favorite charts because you're still kind of in a downtrend. Needs to break out through the 50 to tell you there's a new dynamic. Not finding anything off of that one, FTSFX. STX, I would be out of this one, wouldn't be long or short. XLE, you can stay long, use the T-line as your stop. It also needs to break out through this little resistance level. AUDC also is trying to get up through this resistance level. If you're buying on positive trading tomorrow, make sure you get enough strength to get up through that level. ARCL backed off today. It has to trade positive to stay in it. If it trades lower, close it out. Means the bulls are gone. CNAT, stay long. I'd put a safety stop just below today's low. KGC has to open positive to stay in it. If it opens lower, close it out. It's not going anywhere. CVRS, good little J-hook breakout. Stay long on this one. Melly, bearish Harami after a gap up. If this opens lower, close it out because they're coming back to test the T-line. It needs to open positive and trade positive. And Facebook is trading down here after hours. It needs to open and trade positive to keep this fry pan bottom trajectory. Square, has to stay above the T-line also. Now remember, we're getting some resistance at the recent high on the S&P and the NASDAQ. So if you start seeing weakness on the open, some of these that showed a little bit of weakness today, you probably want to close out. Daku, all you can do here is stay long on this steady eddy. QCOM, just stay long also, kind of on your J-hook pattern using the 50 as a support. Trade Desk, stay long on this one, on your kind of your little scoop type pattern. That one's not coming up. Moderna. If you were short, you would have covered your short today. You can go long on strength from here. Nvidia needs to stay above the T line, but note where you're trading. I don't know where that thing came from. Note where you're trading. It needs to, you're not in the overbought area yet, so it needs to break through there to tell you that this slow uptrend is over, or that you've broken out of that slow uptrend. Oh, that's bad. If this would have been, why you always have a safety stop somewhere, but something turned that around, obviously. Right here at the breakout area, we had a fry pan bottom breakout and it came back down into that range. If this opens lower tomorrow, close it out immediately. You don't have anything to hang your hat on at that point. Brinks, this one you can be buying. Morning star signal off the 50 and the 200, and now kind of a double doji setup. I would suspect they're going to try to come back up into the trend trajectory. Oh, well, that's TV. If you're short, stay short. Darna, stay long. Anticipate they're coming back up to test the 200 one more time. PTE has to open positive. If it opens lower, you don't have a chart to trade. We did Daku. Steady Eddie, stay with it. Twillo, stay with it. They're a little left-right combo. WP, MPW. Again, look for a breakout. I wouldn't be long. I'd rather pay for it if it broke out through this level. Cyber, stay long. Also look for a breakout of this level. That one I would have closed out today. You can see where it's having problems right here at the 200. I'd rather pay for it up here knowing that you have a bobble breakout. Yeah, the baby powder of Johnson. Yep. Morning star signal. Notice how far away it was from the T line. Now you have a little doji here, which tells you it still needs to open positive and trade positive. If it trades back below this level, close it back out and wait for the next buy signal. Yeah, that's, can you imagine wanting to produce products if you get sued $29 million for selling baby powder? Anyways, Milam, nothing great here. If you like it, you can stay long. Use the T line as your stop. JASN. All right, if it traded 200,000 shares on a $2 stock, yeah, I wouldn't be trading that. I want something that I can get in and out of easily. Shopify, look at your left-right combo. Started the next trajectory to the upside. Stay long on this one. Goog might see a little bit backing and filling because I think you're probably pretty close to the upward edge of the trend channel. Tandem, just stay long, little J-hook pattern setting up. I wouldn't want to see it come back down through today's low. That would tell me we're probably now in this type of trajectory versus this type of trajectory. Archer Daniels, you can stay long on this one. Not a very enthusiastic trader, but it's moving in the right direction. SFIX back and filled today. I probably would have been out of it yesterday waiting for the next buy signal. Can you buy Daku? No. You've got a stock that's already moved from 40 to 60, up 50%. If you're buying it, you should be looking for things looking like this. It can go higher, probably will go higher, but it's not going to be a high probability trade for your risk reward. YPF, stay long, use the T-line as your stop. Oracle, down here. Yeah, I've never liked Oracle. It's just not a good trader. So if you had been long, you close it out right away because it's going to take a while. 4 kids. When you say stay positive, what are your specifics? How long? Oh, I don't know, JP, what we were referring to. Oh, if I'm saying stay long, it probably means, or I mean, it usually means I wouldn't be buying here, but if I owned it, I'd stay long until I saw a sell signal. So that would just mean you stay long, but I wouldn't be a buyer. Boeing, you're getting toward the oversold area. It's starting to flatten out. Wait till you see all the selling is finally over. ENPH, another one that looks like it's trying to break out. Get ready to buy this one. Notice your left-right combo. Daku reported this evening. Where is it trading right now? Guess I could find that out. Whoops, it's trading down at 54. So it's down 4 points. Growing offshore, diamond offshore. You can buy this one on positive trading. If it breaks out through this little level, you can see kind of the triple bottom down here. Not your greatest looking chart, but it's moving in the right direction. And one more, Vuzi. You can buy this one. It still needs to break this whole downward trajectory. Oops, more. But that was the last one. EIIB wouldn't be a buyer. Well, you could buy this one on positive trading. Obviously needs to get through the moving averages. When you say if it opens positive and stays positive after doji, what do you mean stays positive? That it doesn't come back down through the open and or back down through the doji? How long before you enter long? If the market's opening positive and the stock you're looking at it opening positive and starts trading positive, maybe I start getting in within the first 90 seconds. If it's lollygagging, I just watch it and see whether they start eventually start trading positive. Oh, I have to get some new jokes. The grandkids haven't been around for a while. Positive trading, yeah, just above the close of the previous day. Okay, everybody. We will see everybody bright and early tomorrow morning. We'll see you then. Oh, did we have a special tonight, Becky? Get a free week, or if you're not a member, what? I forgot to put it in, didn't I? Okay, yeah. Think if you're not a member, here's something you can click on to get a free week of the chat rooms during the day. All right, everybody. See you tomorrow in the chat room.